Almost every day, you can pick up a newspaper and see the word tax in the headlines. So why has the issue of corporate tax become so contentious? We met with Wilbert Cannikins of KPMG and asked him to explain.
Well, I think we first need to answer a simple question. And that's a question that I will admit even tax professionals like myself don't often consider. And that question is, what is tax? Well, of course, we can find a definition in the dictionary, but the dictionary only tells us half of the story. In reality, the definition of tax is better understood through a taxpayer's relationship to it. What do people get for their money? Now, people living in China, for example, they may have a completely different view of taxation to people living in France or Germany. A nation's cultural background and history will surely influence the way people see the role and the responsibility of the government. However, I do believe that tax around the globe can be defined by three general characteristics. First of all, taxes are levied through laws. Second, taxes are not voluntary payments. If a payment is voluntary, we should call it something else. And finally, tax is not a payment for a particular service. You can't link what you pay to how you want it to be spent. Once we appreciate that tax means different things to different people, we can move on to trying to better understand corporate tax. If we consider a history of tax, we can see that corporate tax is only a fairly recent development. And in the simplest terms, when a business sells goods and services to a customer, you deduct the business costs from the sales, and what is left is what we call the profit. And it's only from this profit that a government can take a prescribed percentage for corporate tax. Well, that seems fairly straightforward, right? So what is it about corporate tax that causes this confusion? When corporate taxes were introduced in the early 1900s, this was the model. And because businesses were largely based in a single country, there was a very clear supply chain. Taxes were simple to collect, they were easy to legislate, easy to explain, and easy for everyone to understand. However, as we move ahead in time, the corporations began to change. Traditional bricks and mortar businesses began to evolve, and they became multinationals. With the desire for cost efficiency, the different functions of a business could now be operated across many different countries. And also it became possible to buy and sell internationally. And what we see is that all of a sudden these corporations were dealing with more governments, with different regulations, different incentives, and with different taxes. Now we need to understand that the government of each country is now claiming their own percentage of the profit. And this potentially could lead, or even would lead, to double taxation. To avoid this, governments and international organizations developed tax treaties. These tax treaties divided tax income between countries. And many of these treaties still govern today's corporate tax payments in the world. But over the last 25 years, the nature of corporations continued to evolve, and it drifted away from these traditional models. The rise of IT-led corporations and the developments of digital products has drawn further attention to the way corporations are currently taxed. Intangible assets, such as know-how and intellectual property, are becoming a critical business asset. So now, as you can see, the global and local corporate tax systems have become extremely complicated, with large, highly evolved international corporations being held accountable by the same old legislation, based on what in many cases is no longer relevant. And corporate income tax rates, let's not forget it, they're also a tool used by jurisdictions to compete for more business or to attract specific industries. And this further adds to the confusion between corporations and governments, which in its turn fuels media headlines and public distrust. So, if you ask me, will this complexity be reduced in the future? My simple and my truthful answer is no, it will not. But what I can say for certain is that corporations will continue to evolve. And individual governments will continue to have different political, social, and economic priorities that shape their own tax policies. Now look, what corporations, governments, international organizations, but also tax professionals like myself can do is to work together to develop up-to-date tax treaties. And these will have to be based on new agreed principles that better reflect today's multinational and digital world, and that can be more easily communicated and understood by everyone. And I think that is the right thing to do.